Just a reminder, folks, that before delving into this full-fledged podcast, the content in this podcast and video is purely for entertainment and informational purposes only. Always consult a licensed professional before making any investment decisions. Remember, investments that aren't FDIC insured can fluctuate in value, and so please invest wisely based on your own needs and risk tolerance. Now, on to the podcast itself. Good evening, folks. And once again, we have our bi-weekly Margin Hangout chat with your host, JJ, alongside Paul and Shawn from Better Call Paul. So this is our ongoing bi-weekly series where we talk about margin, where we talk about leverage, and where we talk about basically our own experiences, our ongoing experiences, basically using margin as a tool to increase your net worth. Basically, hyperlapse that rocket, so to say. So, Paul, who wants to start first? Shawn, why don't we start with how your ongoing margin experience is so far, and what sorts of let's talk all about it.
Absolutely. Um, so far, I think I've been enjoying it. It really makes me pay a little more attention to what's going on with everything I've been buying, and I noticed I definitely have been a lot pickier about what I have purchased inside of my margin account.
Not GME this time, huh?
Well, for a long time this morning, it was the only thing green in my account or in my portfolio for a while. But no,
I noticed
that's going well.
GME was green today.
It was
Did it
for
finish
most of the
green?
day.
Are you still down though overall, or are you actually finally breaking even?
No, I'm still down at GME. I'm still down, but that's okay. I don't know if you guys follow the story at all, and we're already getting off topic. How do we do this? But big things are coming.
That's the sincerity of this chat, right? So it's unscripted,
It's true.
We go with the
I don't know
flow.
if you
That's
guys-
all it is. That's just be a regular, natural conversation.
Absolutely. Absolutely. The Ryan Cohen, the CEO, he has already said publicly and in some chats with people that he is going to make a huge purchase. He's gonna deploy the $9 billion that he has sitting in the bank, and he's gonna buy something. And Michael Burry, even everybody knows him, and even he's got involved and put out some statements on X about what he thinks Ryan Cohen should buy. Wayfair was one of them, one of the security companies. So we're waiting. We're just waiting around. They put out a pay package for him that if he can get, I believe it was up to $100 billion, make the company net worth of $100 billion and have, I think it was $10 billion a year. Then he gets this enormous, $34 billion pay package where he can buy shares at, at like $24. Even if the shares are going for 200, so it's phenomenal. I haven't bought any more in a while. I'll still hold off at I have right around 300. So I'll hold there.
300
That's
shares, huh?
story.
Okay.
That's my little story on it. I'm holding. I don't use any of those silly
long-term game, huh?
It is a long-term game, and I'm willing to hold. To me, it's already money. I've been in there for 5 years. It's money that I've already spent, and I'm not worried about it. But it will pay off.
It's hard to believe it's been 5 years already.
It's crazy. It is.
Who's Michael Burry?
What's that?
I said, who's Michael Burry?
Yeah, never heard of the guy.
No
Isn't
clue.
he buying GME stock?
Probably.
He bought a bunch. Even he bought a bunch just recently. So I'm sure
He's a strange guy.
A bunch of viewers got logged off.
Yeah. All right, get back to margin.
Possibly. Yeah.
Yeah.
Back to margin. So when you say you've been picky with your margin account, what do you mean?
Yeah, exactly. Elaborate for the viewership.
I basically have 6. That's it. I've bought 6 different ETFs in it: Bank, NCL, HDIV, HHIS, QQCL, and USE. The only ones that
nice healthy selection.
I like it. To me, it's like a solid 6, right? It's a solid 6 different ones they don't fluctuate a lot. They're pretty solid. The only one that HHIS is probably my worst one right now, and I'm down 11% in it. But HHIS holds a few things that are pretty volatile inside of it. And yeah, it is what it. But
it goes with the distribution, right? Like when you go higher distribution, the implied volatility or whatever it holds, it's gonna suffer way more during any blip. So you gotta be emotionally prepared for that, right?
Yeah.
Can't have too much of your cake and eat it too.
No.
At the same time, right?
So do you find that your margin account is outperforming your other portfolio?
It is. It is. I, I think when our last chat we had, JJ, I was giving JJ all the stocks I was holding in my
Mm-hmm.
TFSA, and I did start
Yeah.
cleaning out my TFSA. I got
Oh,
rid
very
of,
really?
nice. Okay.
I did. I got rid of Reddit. What else did I get rid of? Shopify.
Circle?
No, I haven't got rid of that yet. But I'm slowly weeding them out, and I really think I'm not going to do any more single stock ETFs for a while. Maybe the volatility of them just recently, especially now, right now, it's pretty harsh. It's pretty harsh. You know, I haven't been
Ah,
It
doing.
it's
is.
just the beginning, huh?
It is kidding. It is beginning, and I'm going to clean it up some more. I'd like to get it down to probably about 18 different ETFs.
For sure, for sure. I think especially people who are both us and then everybody who's watching, they have to think about the fact that right now it's just the beginning of any sort of possible correction to come. If you're already sweating, if you're already feeling uneasy, then I think that's a time to reevaluate whether or not whatever you're holding might be too aggressive for your risk tolerance.
Mhm.
That's right.
Because any major correction hasn't even started yet, to be
No,
frank.
no.
So yeah, something to think about, right?
Yeah,
Yeah,
it is.
you're
But
right, JJ.
go ahead, Paul.
I was well, I was just going to say I was talking to I did a video with a CEO from the States today
Mm-hmm.
and posted as soon as Tracy's done editing it. But that's what he was saying is that, with the market going down, if you're not willing to buy more of the holdings you already have, then you have to reevaluate your risk tolerance.
Yeah.
Because really, when you think about it, if you have a stock that you love, right? Say you love Tesla and it's $400 a share, now it's $200 a share, you should be buying more, right? Unless something's changed, right? Unless something with Tesla itself has changed. If it's just the market being volatile like it is right now, then, but yeah, what you're saying, JG, is exactly what he said, that, your risk tolerance might not be right for you if this is bothering you already.
I think this is a time at which investors actually make money. It's not at all-time highs. It's
I
during any
totally
it's
agree.
during any correction.
Yeah.
Yeah.
Yeah, you're right. And to be honest with you, Shawn, like I was thinking that, in 2026, I'll be adding to my anchors. I'll be buying more conservative funds and
Mhm.
building up that defensive position. But as soon as those stocks started tanking, not those stocks, but like the aggressive ones, right?
Yep.
The boosters and juicers or whatever.
MSC.
Soon as they started tanking, it was like, man, I want to buy some of those now. The price is so low.
I can't lie. I bought another 100 shares of MSTE today.
Yeah.
Okay. On margin?
Yeah, you know what? I bought it. I
No.
bought it in my TFSA. You know what? It lowered my cost average for another. I don't know. It was like another buck a share. So I'm down
You gotta be
to.
careful.
I think
It's still tied to your margin. So just gotta be wary about that.
it is, but
It
I did.
heavily contributes to your overall margin availability.
It does, but I deposited all the money into it. I didn't use existing money or I didn't sell anything. It was new money I deposited
Mm.
into my TFSA. So it shouldn't affect that at all. Hopefully. But yeah,
I bought more today too.
I knew it.
Yeah, I bought I think 100 shares in my TFSA and 50 shares in my RSP. Even my brother-in-law sent me a text message. Hey, what are you doing with MSTE? Because he bought another 500 today.
Ooh,
Oh,
okay.
did he?
Yeah,
What?
he did. But I think he just started buying, so he's not like averaging down.
Oh, he's fine.
Yeah, he's okay. And I think he said he's going to buy, in my sister's portfolio and his daughter's portfolio, he's going to buy 500 more in each of them tomorrow. You know what, JJ? I'm so far into MSTE now that to me it doesn't make sense. One, to panic sell, right,
It
and
co-
lose all that money,
Yeah.
and two, like, why not buy more now at this point? I mean, in my opinion, right? Like, if your average cost is $12, $13, $14, and you can pick them up for, I think it was what, $270 when I was buying it,
Yeah.
It closed at 269.
right? So, yeah, it's just too cheap. Unless you think that Bitcoin and MSTR are never going to recover.
Maybe not in the short term, but we don't know, right?
Hey, we're not playing the short. We're playing the long game.
Yeah.
Fair enough.
At least I am. I mean, you are, JJ. You're a young guy, right?
Yeah. JJ's got youth.
Eh,
What's that?
JJ has youth on us.
That's right.
He's young.
yeah.
That's right.
Fair enough.
Okay, so outside of MSDE, Are there any other companies that are, well, I know, Shawn, you said you don't want to buy any single stocks, but is there any other companies or ETFs that you're looking at now that the prices are coming down a little bit?
Yeah, exactly.
You know what? To be honest with you, I don't know if you guys remember, I said I was saving up a few months worth of distributions and that kind of stuff.
Yep.
I ended up just deploying it more in HHIS and UTES, buying my, what do you call them there, Paul? Your base ones, your, what did you call them?
You're talking about the anchors?
Anchors.
The
Your
anchors, yeah.
anchors.
Basically,
Your core
I
positions,
just deployed my, with the money I put in out of paychecks and blah, blah, blah. It was close to $5,000. And I just deployed it all in the bank, Biggie, NCL.
Oh, you bought Biggie today too, huh?
Div, and I just deployed all the money across those.
Yeah.
I want to keep it solid. And you know what?
Did you buy them all in your TFSA or anything on margin as well?
I bought in the past week in my margin, I bought I bought UTES. I did buy some more ENCL and some more bank.
Okay.
Did you get your margin account up to 10,000 now, or what are you sitting at?
I am at 9,900.
Oh, very nice.
So that's how much you've borrowed, or that's what your account's worth now?
That's what the account's worth right now.
Oh, okay.
So I'm almost at the 10K month. Because I'm not doing the same as you. I'm not deploying a dollar figure. I'm buying actual like 50 shares or 100 shares. So sometimes it's, whatever, $489 instead of just the $500.
No, I just keep it a clean $500 per buy now, at least in my margin account. But I hit, JJ, I don't know what do you think, but I hit $10,000 and then I just stopped, and now I'm waiting for a big drop. Like waiting, because all the ones we have are so conservative, like HDiv, right? And ENCL, Utes, and Oily are doing so well right now. So when they drop down during the day, they drop down like 0.5%. It's not really a buying opportunity, right?
I mean, it could be. Depends on how you see it.
I think my QQCL was down something like 3 or 4%. So that would have been the one that was down the most that I could have bought more of.
QQCL is finally lower than my cost basis. Well, almost lower than my cost basis.
Ah.
Yeah.
So you're going to buy more?
I don't chase .DCA, especially on margin. So it's already at my target weighting. So I'm going to wait and see. Because my next to go that I'll probably add to would probably be HDiv, because I'm a little underweighted. But yeah, in terms of today, I trimmed off all of my ENCL actually.
Oh yeah? You sold it all?
It's gone.
Really? Why?
From your margin account or from your TFSA?
Margin. I didn't have any on TFSA. I only had ENCL on margin.
Did you buy anything or you just sold it?
I trimmed off at highs yesterday, which is like 1975, something like that.
Yeah.
And then today I decided to get a bit of more HHIS. So like 500 shares of that to average down a bit. Be mindful that because of how volatile HHIS can be, especially right now, it's not a good idea to add too much. So just like a little bit here and there. And then HYLD, because that was the only other position that was lower than my cost basis. So about 1,500 shares of that. And that was about it for now. Yeah. We're playing at different numbers here.
Yeah, true enough. True enough.
To be fair, you could be playing at the same level. You could. If you wanted to.
I don't think so.
Yeah, 1,500 shares is only like $10,000, right? You can easily buy that.
Oh, that's true. We could. I did sell last week. I sold 300 shares of ENCL just to buy other stuff because it was up so high. I wanted to take advantage of it and buy. I can't remember what I bought. I bought PLTE. I might have bought. I bought Canny. I think maybe some HHIS. I can't remember. But now wait till it reverses. One ENCL goes back down into the 17s. I'll buy more.
Fair enough.
Yeah.
In terms of the ultra yielders from Evolve, I'm actually going to be getting rid of all of them, especially in my TFSA. I just don't like how aggressive they are. And yeah, that's what I'm looking at. Not right now, but eventually when it rebounds. So that's my next to go.
Oh, big! You gonna sell Biggie?
Yeah, Biggie. Both Biggie and Kenny are gone.
Yeah. You don't want them in your TFSA.
No, not really. Because TFSA, I'd rather prioritize more on growth,
Yeah.
Whereas margin, you can go a bit more distributions, which is fine. It's also about the same. But in terms of the TFSA, it's because I can't really, I can't pull anything from there, so it doesn't make sense to go distribution heavy. So it makes more sense to be less distribution heavy. So the the index like ones. So I think it's fine as is. But yeah.
That makes sense for you, right? Because you're not pulling money out of your TFSA.
I can't. It's
me,
collateralized against margin, right? So it's like it doesn't make sense to pull anything out there.
I'm pulling a little bit out of my TFSA, but not a lot. But I want to make as much money as I can in there so that I can pull some out and reinvest at the same time.
Mm-hmm. That makes sense.
So, guys, do you have any, JJ or Shawn, any idea on why the market's tanking the way it is? Something to do with AI.
I think it's about time, right?
No, well, I don't know. Something to do with AI and some company that's boasting that they're going to like replace all the other AI companies in the next 6 months to a year or something.
Okay.
Make them all obsolete. So, as usual, people panic. It's kind of like what was it last year? They had the deep fake.
Markets have nothing to do with actual like reality. It's all just on fear and psychology.
Yeah,
So
it's psychology, a lot of speculation. I think it
has no real what's the word for it? Has no real value or baked into it. So it's like, whatever, yo. Who cares?
Yeah. Definitely. Just got an alert. Bitcoin's down to 62,800.
Ooh,
Wow.
okay. That's exciting.
Yeah.
62.
Wow.
So it's what, less than half of its peak?
Yeah. Wow. That's a huge sell-off, man. That's a huge sell-off.
Are you guys going to
62,887 at the moment.
You guys going to buy any Bitcoin?
It's tempting.
Maybe in my RSP.
Has it hit a bottom yet?
Oh, who knows? I wish I knew.
Yeah. Yes.
It's going somewhere. That's for sure.
62.
So, Paul, what did you buy in your margin account? Did you buy anything?
I didn't buy anything else. Once I hit that $10,000, I stopped. So
what are you waiting for?
What's that?
What are you waiting for?
I'm waiting for that 10 to 20% crash.
And if that doesn't come in the next 6 months, then what?
I'll probably start buying again.
Does it not make more sense to buy a little bit here and there? No, just to satiate that.
Well, I think when I first started my margin account, the goal was to buy $500 per week until I hit 10,000. But I got a little bit more aggressive and I started buying like $500 every day until I hit the 10,000. So I got there faster than I thought I would. And I just, do
you think you went too fast? Because that's what you're saying with Robin, right? Like, are you worried about something's happening or?
Just, to be honest with you, JJ, like 2-3 years ago, I would have never thought about using margin. I wouldn't have even considered it, until all of a sudden, we found out you're using margin, Robin's using margin, Jordan's using margin. Seems like there's a lot of people all of a sudden, maybe, I don't know if it's you started before Wealthsimple, but a lot of us kind of got into it once Wealthsimple started offering it.
Because IBKR is like the OG in terms of margin, especially in Canada. So it's like when Wealthsimple came by, I was like, okay, great. It makes it even easier because using IBKR is kind of this a little bit more nuanced.
Yeah.
And they all can change their margin requirements just like that without any warnings. So when it comes to Wealthsimple, I guess a little bit more tame. So to be fair, we don't know because obviously they can also change their margin requirements. So I would definitely be wary about the ones that are not diversified.
Yeah.
Looking like, especially when it comes to HHIS, that can definitely change, especially with the way the price is like tanking. Okay, maybe not tanking, but like definitely dropping. So that margin requirement for HHIS can definitely go up to at least 40% and maybe even 50%. So because it's not a diversified position at all. So just be mindful of that.
Yeah, I guess really, I'm just trying to learn how the whole margin thing works and see how the account reacts to certain situations. And I don't want to buy $100,000 worth of ETFs in my margin account, and then all of a sudden I'm getting margin called because I bought the wrong stuff at the wrong time, or I'm taking baby steps.
That's fair.
Yeah.
Though it's too boring for YouTube. Yeah.
Well, I tell you, man, with how low MSTE is getting, it's almost tempting to buy some on margin, eh?
Oh, yeah, it is.
Oh, you could. Isn't that like 40% margin requirement right now? Something like that? Or is it 50 now?
Not sure.
Let's have a quick peek.
Either that or maybe something like HHIS if it keeps going down a little bit further.
It's dropping in the same volume as Biggie, basically.
MSTE is 75% margin requirement.
Okay. What do we know, right?
I think they've jacked that up a bit.
Do you guys ever watch? I think he's a Canadian YouTuber, and his channel's called. I think it's is it Monthly Mint?
Not familiar.
Sound familiar?
No.
So I watched the video of his, and when MST was at about $4.80, he came up with this plan to buy $100,000 worth on margin
of MST.
Right? Yes, of MSTE. And he calculated all the numbers, how much he would make per month, how much the interest would be. And I guess he was kind of assuming that MST was almost near the bottom. But it's gone. I think it's gone almost half from when he bought
I think he should wait. I think he should wait when it halves even more to $1.50, then do it.
Well, so I think with his $100,000, he bought something like 22 or 20 something thousand shares. And then somebody messaged him and said, now that it's down in the $2 and something range, what did you do? He doubled down. Wow. So he's at like 45,000 shares. Yeah.
Okay.
But if his thesis is
right, I can see why, right? He's at almost 1.3K followers and with just 15 videos. So I'm just like, okay.
If his theory's right, and let's say MST even goes back up to $8 or whatever, right? He'll sell half of his account, get all of his money back that he put into it, and the rest will be all like free. Does that make sense?
It does. Nothing's free.
Yeah. But you know what I mean, right?
Yeah.
If he bought $100,000 worth on margin and his account gets up to 200,000, he'll sell off 100,000 of it. Everything left over will be all the shares left over. I don't think he'll owe any money on them.
Yeah.
That's fair. I guess. Well, then he has to worry about the capital gains, then, right? So
yeah, true enough.
Nothing is ever free. Nothing is ever free, especially when it comes to a personal account.
Like when I was watching that video, and
then worst case scenario is if it halves down, then he effectively lost half of his investment.
Oh,
and he's already going to be in a margin call, especially with that 75% margin requirement. Well, it's especially if you're at 75% margin requirements, even if it goes down by 30%, you're effectively in the margin call.
Yeah.
Wow.
Right?
Yeah. I don't know.
And if that happens, it might get jacked up to 100% margin requirement.
Yeah.
Which means that if it goes down even by 1%, you're already in a margin call. So it's like, hey.
I know he did say that he had like $100,000 cash on the side, that if he had to, I guess, pay for the shares.
I think he needs to be prepared to deploy that. That's for sure. If he's going to go like this.
If you had the 100,000, why not just buy the shares?
I mean, why not? I mean, the temptation of using someone else's money to buy stuff, right? Instead of losing it in your own, but goes both ways.
Yeah. Yep. All right, gentlemen, I have a couple of questions for you.
Let's do it.
All right.
I'm going to read them off. I'm sure you've never heard these questions.
Let's do one by one.
I'm sure you've never heard these questions before.
No, just first time. Let's do one by one.
Okay.
Surprise us.
This one might be more for JJ than for Paul or I, but I have a question. It's tax.
No, wait, I think we can all answer this anyways, right?
But yeah. JJ's smart. JJ has the big brain out of the three of us.
I'm using margin. I should be dumb as hell, right?
Yeah.
All right. I just realized you got to shave your head so you can.
I really do.
Put your bald cap on. Actually.
Yeah.
There you
go.
go.
Just shave your head and see what Anna says when she gets home.
Man, I think I would have to live out in my shed if I shaved my head.
All right, go for it.
Okay.
That'll be something.
All right. First question. It's tax season. Is interest tax deductible that you've paid on your margin account?
Paul, what do you think?
I think it's tax deductible, but I think you have to invest in what equities that will provide an income, and I think they have to be Canadian listed. No,
I don't believe so. I mean, well, it hasn't stopped me yet, right? So I'm playing the interest, but I don't think that in terms of the rules because when it comes to CRA rules, obviously, if you're going to be, for any viewer who's listening, clearly, fact check this, but just opinion based here. When it comes to CRA's rules on interest deductibility, there was an error that I made last 2 weeks ago. Basically, you need to keep essentially interest deductibility has to be done on anything that is taxable. And so as soon as you move it into like a tax sheltered account, then that interest deductibility goes away because you're not paying taxes on that, right? So essentially, you need to keep it either in your margin account or any other taxable account, or borrow that money for like a business that is taxable, right? Because eventually you're going to sell your business, and that's going to be taxable.
Yeah.
So, and when it comes to the rules itself on tax deductibility, I think Jordan did a video on this, but I don't believe there are any sort of like strict regulations. So yeah. So anything that pays capital gains, eligible dividends, or interest, essentially they should all be tax deductible because technically you're still paying taxes on everything. When it comes to Rock though, that might be a different story because you're not paying any taxes immediately on those gains, right? Because everything is tax deferred.
Yep.
So maybe be wary. Just be wary on the Rock portion of any fund that you're using. But otherwise speaking, they should all be tax deductible per se.
Does Wealthsimple send you some kind of a slip that shows
Yeah.
the interest you paid? Yeah.
Yeah.
Okay, that's good.
I mean, you can also, even if they don't, you can just look at your activity, right? Because under your margin account, there's the amount of interest that you pay every month. So you
Yeah.
just add that up, right? And then just figure out the breakdown that way.
Okay.
Right. So let's say for example, you have 6 different holdings, and then you have like, let's just break it down. You have bank, you have some US listed fund that's all going to be forward income, and then you have everything else. So effectively across the board, if it's something like 50% Rock, and then you have like 20% foreign income, and then 30% capital gain / eligible dividends, then effectively that 50% is pretty much tax deductible, and that Rock portion you might just be a bit worried about that, but obviously double check with your tax accountant. But effectively everything is technically tax deductible as long as you keep it in a taxable account.
Okay.
Yeah.
Let's go to question 2. Okay.
So wait. Before that, Shawn, do you have anything to add to that? What do you think?
I think I always thought from before I opened up my margin account, I tried to read different news articles. Well, I went on Wealthsimple, read theirs. Actually, I deal with Scotiabank. I went on Scotiabank and read what they had on their website. And from what I could see, that interest paid, any interest you've used in your margin, that you paid in your margin account is tax deductible. That's what I've read. I'll find out. It is tax season now. So even though Paul and I only had our margin accounts for, what do we have, November, December, Paul?
Yes.
So it'll be very little.
Paid like 20.
Yes. Tax deductions. My kids are too old. I can't use them as tax deductions anymore.
Yeah, true.
So, but we'll find out. I'll find out in the next couple of weeks when I make my appointment and go see my tax specialist. But I believe it is, but we'll find out.
It should be, right? Everything you made is technically used to make more income.
Yeah.
So it's like it's a natural effective income source. So
And
why
by
wouldn't
the
it?
time we do the next video, I should have my answer.
All right. Question number 2.
Question number 2. Do you worry about interest eating into profits on long-term investments in your margin accounts?
I don't.
Paul, what do you think?
If you plan on holding whatever you've bought, ENCL, HDIV, whatever, in your margin accounts, and you plan on holding it for, if you're just letting your dividends or your distributions pay off, are you worried about, adding time or anything that with the interest that you're paying, eating into it?
No, because I think that's the cost of having the margin account, right? Like you wouldn't have that money to buy the investments that are paying us the distributions, right? If we didn't have the margin account. So we'd be making nothing. At least this way we're making something. That makes sense?
Yeah, I don't worry about it too much. I only worry about it if the actual asset value has dropped below what I've spent in buying the covered calls or the ETFs, whatever. Then I kind of worry about it. But I think in the long run, no, I'm not too worried about it because I think I've played it pretty safe with my account, with my margin account. JJ, how
Yeah,
about
I
you?
think that's why we picked the funds we did, right? Because we want them to hopefully either stay flat or appreciate in value.
Yes.
Okay, actually, yeah. So when it comes to this question, Purcell, I mean, you can kind of treat of it. So one thing I always said is you can kind of treat of it as like a real estate property, right? Anytime you buy a property, how do you get leveraged? How do you get such big returns? Well, I mean, you're effectively leveraging what you have plus 80 to 90% what you borrow from the bank. And so you can kind of treat this in the same perspective, right? Assuming a typical home goes up like 5 to 6% per year, and you put down like 20%, and you're okay, you put down 20% on average, and you're effectively borrowing 80% from the bank as a traditional mortgage, and assuming you keep that for 20 years, well, effectively that price skyrockets upwards, and then that amount you you would not have that same amount of returns had you not taken that loan from the bank, right?
Yeah.
And so you can kind of treat this as the same perspective in the sense that assuming whatever you buy on margin is diversified, because you can also always need to worry about margin calls, whereas you don't have to worry about from a traditional loan. But then again, traditional loans are also way harder to get or to secure. So there's always that perspective you have to keep in mind. But essentially speaking, when it comes to borrowing our margin, what these kind of margin loans that Wealthsimple offers are pretty low, like in terms of the actual rates they offer. They are almost in line with the overnight rates that any bank charges.
Mm-hmm.
So like if you look at a traditional like a mortgage loan that you're borrowing right now, they're around the 3.5% range, and that margin loan effectively is like 0.5% to 1% higher. And secondly, arguably speaking, those rates that you get are also way more flexible and deciding out what you can buy, right? Yeah, so it's kind of hand in hand, where in the sense that anything that's any sort of interest that you pay on your mortgage as tax deductible, well, any sort of interest that you pay on margin is also tax deductible.
Yeah.
So it goes hand in hand. You get high exposure to upside, but you also get higher exposure on the downside. But then assuming in the long run, in the long term perspective, and that you get those 10 to 12%, not 10 to 12% nominal returns, but just based on historical returns of the S&P 500. If that compounds every year, and then you lose that 4% on interest, you effectively still keep 7 to 8%, not factoring in taxes,
Mm-hmm.
right? But then if you do factor in taxes, then it could be you take off 0.5% in your highest marginal tax rate, and you keep like 6%. That's still 6% better than had you not invest and taken on that margin interest loan. And so the more responsible you are, the more calculated risks you take. Effectively, you're the biggest winner essentially in this scenario, right? And that's also one of the reasons why the broker offers such a competitive rate, because that percentage is based on the principal that you borrow, and effectively the higher allocation of your margin account, the more you borrow, the more the broker wins,
Mm-hmm.
and the more you win in the long term, assuming you do this all safely. You don't bet your entire house on MSTE, but or something else. Take calculated risk that it works in the long run, not anything short term, and it's a win-win situation, right? A CRA collects more from you, you collect more, and the broker collects more also. So effectively it's a win-win-win situation for everybody, assuming you do your research and homework properly and you don't sell on a panic.
True.
Yes.
All right.
Is that a smart enough answer for you, Shawn?
It's a great answer. It's a good answer. It covers a lot of stuff. All right. Next question for you boys. Should you use stop loss orders to protect severe losses in your margin account?
I'll go with that first then. I think it depends on, again, this depends on what you're buying on margin. Let's say if you're buying something highly volatile like TSLY or any sort of Tesla derivative or Palantir derivative or a single stock derivative, effectively. So I'm going to think about mine, like think about Strategy, Coinbase. You can fit Tesla in there. You can fit Palantir in there. You can fit Reddit in there, you can fit Circle in there, any of the single stocks, ETFs, or any of those derivatives, then effectively speaking, that could be a good mitigation strategy, definitely a good hedging strategy. Because keep in mind that with these sort of single stock derivatives or any sort of thematic risky sectors, the margin requirement on each holding will change when it comes to fluctuations. Let's just take a strategy, MSTE, for example. When it was doing very well, when strategy was during its high flight period, MSTE, surprisingly enough, was also because of it being such high in terms of assets under management, it was around like 200 million AUM or something. So that kind of dictated the fact that when it was doing well and was paying such a high distribution, its margin requirement was, pretty low. It was at 30%. So, but then you have to realize that there's going to be, especially since it's such a volatile holding, when it comes to the underlying, now, once strategy pretty much went bonkers, when it corrected, that price effectively went down like 80%. And so also when that happens, that margin requirement also goes up because the broker also needs to protect its own principal, right? It's not gonna. It's when broker puts up this borrowed money, they basically need to guarantee that whatever they put up, they need to get back.
Yeah.
So when that happens, their margin requirement is going to go jack up as well. So effectively, that margin requirement went from 30% to 40% to 50%, and now we're sitting at 75%. So effectively, if you're going to be doing bets, basically you're gambling with margin on like single stock ETFs that basically you're attracted by the high distribution, then putting in any sort of hedging mitigation factor would be a good strategy. But if you're looking from a long-term perspective and you're actually thinking about it smartly in terms of using diversified products, then it might not be a good factor because when it comes to then effectively you're not playing in the same strategy in the sense that you can be averaging down, lowering your cost basis when that's what you should be doing to buy cheaper and get more returns in the long run. So it's not a set in stone answer. It's always based on your own risk tolerance, your own risk capacity, and whether or not you have the stomach in terms of what you're betting against and what you're holding. So that's my answer for that.
Paul, how about you?
I've never actually used a stop loss before, but I'm trying to think of how I would use it in my margin account. And I wonder if it would be applicable. Let's say you bought, like you were saying, JJ, a single stock ETF, take Tesla.
It's kind of like a limit. It's like a limit sell, effectively.
Yeah. So say you took something like PLT or like Palantir or Tesla, one of those, and maybe you bought it at $20 a share and it went up to 30. Okay. So you're well in the green. Maybe if you put a stop loss so that if it starts to tank, you'll be able to capture all that profit instead of losing it all. But I don't know if it was $20, I don't know if I'd want to put a stop loss at like 18, because then if it goes down to 17 for a day or two and then shoots back up to 20, now you've just sold it at 18 and lost money.
You could, yeah. It goes both ways, right? When it comes to major losses and also major wins. Because Wealthsimple is not really built for like trading, so you don't have like trailing stop losses. So these stop losses that you put in, they're all manual, which means that you need to be staring at candles all day long.
Yeah.
Not a fun thing.
Basically.
No.
Yeah.
Okay, you guys ready for the next one?
Yep.
All right.
Wait, Shawn, what about you? You need to answer your own question too.
Yeah.
It goes both ways.
Yeah, I had two different thoughts on it. Like times right now when the stock market's kind of volatile and it's not quite a crash, but it's starting to look like a crash. I haven't used any, but I've been thinking about it. I've definitely been thinking about it. But I think on a normal, outside of what's going on right now, I wouldn't use one. I don't think you need to. The stock market is by nature, I think, a little bit volatile. We all know it's not necessarily what the stock is doing. Kind of outside forces can sort of adjust prices on the stock market. A war opening up, or for some reason, seems to affect a lot of prices. So no, I think on a regular basis, no. During volatile times, yes. That would be my thought on it. So maybe I'm going to set some up tomorrow.
That could also dictate risky your bets on margin are, right? If you need to be putting those in place.
Yeah.
So I think that's a good gut check in terms of your riskiness, right? So
Yeah.
personal. I mean, again, there's no set in stone answer. It all depends on the individual investor and their risk tolerance and how active you want to be in terms of capturing those losses / gains.
Yeah. I think by nature, and Paul will probably back me up, I'm a little bit of a gambler by nature.
So that could be a good tool for you then.
Yeah, exactly. It might be my little safety net, kind of save me on some things. All right. I'm going to ask you another question. How long do you think you should be trading stocks or anything before you decide you should use a margin account?
Shawn, why don't you answer that first?
That's a good question.
Let's start with that's the inexperienced.
Inexperienced. That's me.
Yeah.
That's a good question. I'm glad I asked it. I think it could be in steps. I think if you're more if you're more inexperienced like myself, but I have a good job, it pays well, using $10,000 in margin isn't that big a deal to me. I can afford it. But I don't have a great experience. So I've only purchased sort of, as Paul would call anchors, things that
and boosters.
Core foundational holdings.
Exactly.
That would be a better technical term for it.
I think at least 3 years, of, but not just trading in, tax advantaged accounts, maybe doing some trading in a personal account. It might be a little bit better experience because I think if you have a personal account, you're doing a little more day trading. Whereas I think a tax advantage account, you're sort of buying and just setting and forget it, right? You leave it there. You're not, because it's tax advantaged, you can't really day trade out of it. You shouldn't be anyway. You're sort of buying and let it sitting in there for a year, 2, 3, 4 years. I think if you have a personal account, you're going to do a little more. You see something going up, you're going to buy it. You see something going down, you're going to sell it. So yeah, I think it should be at least 3 years minimum. JJ's got a big grin. What do you think?
I was just looking at their WhatsApp group, and people are saying that tomorrow is going to be another brutal day for MSTE. We'll talk about that after.
There's no surprise, eh?
Yeah.
That's the one thing with Bitcoin being 24 hours a day, right? People are watching it all the time, and I get text messages on the weekend. Oh, Bitcoin's down again. Like, it's the weekend. Stop looking at that stuff.
Oh, it's at 61,473. Woo!
Oh, it went down even. It was at 68 something, right? Earlier?
I think it was at 62.8 when we started talking.
62. Okay, 62.8. Yeah.
Now it's at 61.4.
Bitcoin gets under $100. I'm going to start buying.
Good call. So when it's the
Fair
same
enough.
price as MS.
Yes.
Oh,
at
wow.
that point, MST will be like a penny.
Oh man.
It's effectively a penny stock at that point, right?
Yeah,
right?
It's going to be a bloodbath.
And they're going to have the reverse split if it drops below than $1.
Yeah.
They're going to have to.
For sure.
Otherwise, it's going to get delisted. And I don't think they want that.
No, nobody wants that.
Okay, well, we should finish this question first, and then we can talk about MST getting delisted.
All right, Paul, you go next. I'll finish.
Initially, I said, like, when I was talking about margin, I said people should probably have at least 5 years of like investing. And that was more to kind of like deter young people, other than you, JJ, from getting into margin, you know what I mean, at a young age, 19, 20, or 21, that don't really have any trading experience. Not trading, but investing experience. But I guess that could even go for somebody who's in their 30s and 40s and just started investing, from putting a lot of money into margin and buying something. I guess we can keep going with MSDE, at $15 a share. And then next thing you know, it's at $2 a share. But I think there are some exceptions, right? JJ, you're an example of somebody who's young, but you understand investing a lot. Obviously, you got into margin before we did. So
that also comes with my background. So,
yeah.
I mean, don't forget, like, I already had
How long were you investing before you started using margin?
A year.
Yeah.
Yeah.
And
just to get the toes wet,
because
but yeah.
you mentioned how your parents are into real estate, right?
Yeah.
And so some people are willing to take that risk, of buying a property that you're not living in, renting it out to other people. Whereas I used to ask my dad, like, Dad, why don't you buy an income property? Why don't you buy some real estate and rent it out? And all he could think about is the tenants. And what if they're a nightmare? You know what I mean? You
But
don't want to
there's
deal,
that too, right?
right? So there's two different sides. Some people are risk takers and they're willing to buy the real estate
Mhm.
and most likely make money. So I think that's where you got that from your parents. You realized that you could borrow money, and whether you're buying real estate or buying stocks, you could make money from it.
Or buying a business, right? So
Yeah.
it's all margin technically, right?
Yeah. You're borrowing.
I'm definitely a different case in that I was already exposed from a very young age what margin and what using leverage effectively means and how to do it effectively. So, but when it comes to let's start with when it comes to the YouTube answer, what are you doing if you're not starting at the very beginning? You gotta go big or go home, right? That's the YouTube answer for
Yeah.
you, right? You gotta bet your whole house at the very beginning. Like if you're not effectively making $1 million in one single year, what are you doing with your
geez.
life?
Well, actually, with the
That's the clickbaity TikTok answer.
it's
Yeah.
funny with the way house prices are going right now. Anna and I have been talking about taking some money out of our house to buy our second rental property. It's
That would depend on whether you can get a good HELOC rate on that. No,
we there's something you got to know about my wife, JJ. Everything you want to talk about is scrutinized down to every little iota detail before you
okay.
actually
Then no
go
worries.
to the
then.
next stage of actually starting to look at properties.
Right. So is she too risk?
She she is a safe person. She likes everything safe.
Okay.
She wants as little risk as possible. And I think that's one of the reasons why she'd like to look now is because house prices are down so low, right? Or condo prices and everything is down a lot. So what do they say? House prices for the first time in a long time the average house price is under $1 million now. That's been,
Wow.
like 20, 22 years or something in Toronto since prices have been that low.
Yeah, ridiculous.
Because of all the
Already,
condo
always,
prices. But Shawn, if you were, how much would you take off your house? Like how much in equity would you pull in order to use as a down payment?
We're kind of thinking buying another condo because we have one now, right? So we're thinking of buying a second condo.
You're treating it as an investment property with tenants?
It'll be a definite investment property. So probably whatever gets us above the 25% mark, whether it be
Like 100
$100,000 or 140,000 or something, pull out of the house.
So if you pulled 100,000 out of your house, wouldn't that increase your mortgage payments by like $500 or $600 a month?
Yeah, don't
Would it?
don't take it the wrong way, Paul, but I can afford that.
Okay.
Yeah,
So then you should be maxing out your TFSA.
I tried. I did put 12,000 into it last year, my TFSA. So I was happy. And I'm already at just shy of $3,000 this year already of my TFSA. So, but I don't want to, I don't want to, I hate talking about myself too much, but, I can afford to pay that extra $500 or $600 a month. It's a great investment, having another investment property, right? So
It could be.
yeah,
But there's also a huge tax headache you have to worry about later on.
yeah, well, sort of,
Right?
but it should outpace it, right? The amount, especially if everything is down so low right now, properties, even out here in, we're in, I don't know what you want to call it, Southern Ontario, Niagara region, condo and house prices have gone down quite a bit as well. So, I think it might be a good time to buy another rental property.
It's definitely
What you can
a good
do,
time
when
to
you can
buy.
think about at the same time, then, if you're thinking about another an investment property, well, then this is where insurance actually can play a very good factor, especially to get rid of all the capital gains when you sell eventually.
Oh,
So that's something
insurance.
you want to
I
think
thought you were
about at
going
the
to say
same time.
burn down my house and collect the insurance money.
What kind of a licensed advisor do you think JJ is in the mafia?
Yeah, look, just burn down your house.
Let me just hit
insurance
up
money.
some connections and let's go with what is it? Oh, what's the word for it? Like you just burn down someone's house.
Yeah.
You claim insurance on that, right?
Insurance fraud?
No, not the word for I would use, but like the term for burning someone's house. I think there's actually another term for it.
Torching it.
Something along those lines, but
Yeah.
yeah, there's a better word for it. But yeah,
Arson.
Arson. There you go. That's the word for it. Yeah.
Yeah.
All right.
No.
You had nothing to do with it, right? So it was purely a mistake.
Yeah.
So when it comes to that, right, you force the insurance to pay that and then get rid of your capital gains.
Yeah. My cat
That's another
knocked
way to do
over a
it,
candle.
technically. Yeah.
Okay.
Surprisingly enough, the room that it was knocked in was full of gas.
Yeah.
It had my 40-year-old newspaper collection in it.
Yeah. All right. What's the next question?
All right. I got one more question for you guys. Is there anything that is a must-have in your margin account? Any particular
Ooh.
stock, ETF, covered call ETF that you guys feel is a must-have in your account? Yeah, it could
Paul, do
be
you want to go first?
an actual ticker symbol, or do you think maybe banking, utilities? What do you think?
I think you want to have a medium risk fund of funds. And I'm thinking, if you want a ticker, I'm thinking of HDIV. I'm thinking of HDIV is probably a must have for Canadians anyways, not for Americans.
Well, what about you? What about a U.S. equivalent? Let's not exclude them in this conversation. This could be pretty relevant. Yeah, one
In the
Canadian,
US
one Canadian, one U.S. ticker.
In the US, I don't think they have equivalent fund of funds, right? I
No.
mean, for a while, I thought WPay was going to be a good fund of funds, but the share price dropped from like $54 to $40.
Oh, actually, right now it's at $33.
Thanks, JJ.
Yeah.
Just,
I know, because I was looking at it today. I'm like, okay.
I don't even want to look.
Thank God. I think I only put in like 5 shares. I'm like, hey, this is a good reason to just to test it out, right?
Yeah. So if I guess if I was American, you'd probably be looking at something that holds the S&P 500. I would think maybe like SPY or SPY or GPIX or T-SPY, maybe something like that.
Fair enough. What about Shawn?
Or Misty, or Misty.
That's solid. That's sound strategy,
Yeah.
Wow. Myself, utilities. I think it makes a solid foundation for a margin account. It doesn't matter in a recession, in a boom, it doesn't matter. Everybody needs electricity. Everybody needs natural gas. I think it's a solid foundation for a market.
Yeah.
What about in the U.S.?
I don't buy anything.
Hey, come on.
Other than GME,
Just
I don't buy anything US. I'm purely all Canadian.
that patriotic, huh? Okay.
But
I do love Canada. I can't lie. I think we have some really good funds.
True.
And maybe
That's fair.
I'm a little ignorant to the American side of things, but
plus you're loading up your TFSA, right? You're buying a lot in your TFSA, so it makes sense to buy Canadian.
yeah, but also the 40% or 43% exchange rate. To me, I hate paying that. Like, Anna and I went to Italy there a couple weeks ago, and buying euros, man, it was like 67 cents on the dollar. I almost thought, let's not go. But it was just,
Do you have a foreign transaction card? So you avoid paying any foreign exchange fees?
I do. I pay the $10 a
There you
month with Wealthsimple.
Oh yeah, you could use that too.
Yeah.
I
So I
guess.
use that with Wealthsimple. So, but yeah, I just
There is a better option technically,
what is that?
because EQ Bank, you get 1%.
Oh,
back.
really?
It avoids all foreign exchange fees, and you get 1% cash, 1% back on all 1% cash back on all purchases. It's pretty good
Oh, really?
for a no fee card. Yeah, it's a
What do you
prepaid.
think,
It's a
JJ?
prepaid debit card, basically.
Is there something you think we should have?
Oh, I have a couple ideas. Let's see. On the U.S. side, if you want stability, you can go with any. You can go with BDCs, business development companies. I think that's a good one. In terms of actual tickers, I can't think of anything off the bat. But in terms of the regular, I would definitely say S&P 500 is a good bet. Probably a mix between T-SPY from Top Alpha and SPLYI from Neos. So I think that's a good 50-50 mix for that. If you want to go ultra safe, you can try Ulti. That's always a good bet. Yeah.
Very safe. Very safe.
Very safe. Ulti is a great bet. WPay could be a great bet,
No.
as is, right? Yeah.
I have a question for you guys.
Wait. I haven't finished yet. So in terms of the Canadian side,
Oh, yeah, you got to do your Canadian side
yeah,
one.
exactly. Well, we're Canadians, right?
XEQT.
FEQT. Well, FEQT.
You could do that. In terms of your margin account,
No.
I'll probably go VEQT actually.
Which one?
VEQT.
VEQT.
The one from Vanguard.
Yeah.
Yeah. No,
Is that
I mean,
what you-
arguably speaking, they're all the same. VEQT is performing slightly better out of all of them at the 30% margin requirement, so slightly better. So there's that. If you don't want to go that diversified, VDY could be. Oh, I forgot. SCHD could be a good pick in the US. You know, just a boring dividend fund that can always.
Yeah.
That's always good. You know. For the Canadian side, let's see. You can't go wrong with bank or utilities. So bank and use, those are good stable ones. And then I would definitely add HDIV in there. Yeah. And if you're feeling thrifty, add MST in there. So yeah.
Wow.
Wait, hey, JJ, way to narrow it down to one.
Yeah.
Hey, as an advisor, you can't pick one, right? So take your pick.
Yeah, true enough.
All right, Paul,
True
what was
enough.
your question?
Yeah.
Okay,
exactly.
so my question is, because JJ, you were asking me if I had bought anything recently in my margin account, and I haven't, but there's actually a reason why, and I'm wondering if you guys think about this as well. Is there a better time during the month to actually add to your margin account, right? Because it's the beginning of February. So if I was to buy $1,000 worth of HDIV today, that means I have to pay interest on it for the rest of the month. If I wait until like the 25th of the 20th and buy $1,000 worth of HDIV, I only have to pay interest on it for a couple of days, and then I get the dividend in March.
I would say day after ex-dividend date.
Buy it when it's lower?
Yeah, I have waited to buy stuff, even though, I have the money in the account.
You're effectively timing.
Yeah,
So
timing. It comes out, like JJ said, it comes down to timing. But, after the ex-dividend date, everybody's selling to jump on their next, whatever purchase, whatever.
Yeah.
And you usually see a dip bigger than what the actual payout is or distribution is. Myself, I've waited for that quite a few times. And it comes into an extra 2-3 shares or 1-2 shares, whatever. But I've waited for that.
I would say starting out, especially on a smaller scale, you can do what Sean's doing. Sean said basically you can time it out after X dividend day. You can get effectively a good price on it. That's what you want to do. You can wait for any correction that you think is happening. You can also do that. But when it comes to when you're dealing with, especially with larger portfolios, then it's a lot to manage. So arguably speaking, besides thematic picks like HHIS or anything that's non-diversified, especially if you're dealing with more diversified positions, they're not gonna move much. You're the long term, the overall big picture, you're not gonna be paying that much more in terms of actual fees, in terms of interest. So just keep buying, regularly. Okay. Treat it as any other account you can. So I mean, there's no good answer, right? So do what you think is best, right?
What do you think, Paul?
Fair enough. Well, I'm that's why I didn't buy today. I'm thinking maybe I'll just wait a little bit longer, and then I don't have to carry it as long, and I'll kind of pick up some more near the end of the month, and then I don't have that extra interest cost, but I get the extra dividends in March.
Yeah.
You can think about it that way.
It's only good for 1 month, right? Because then the next month you're paying interest on it.
Exactly. There's also another perspective. What if that stock that you're waiting for rallied up $2 towards the end of the month? Whereas you could have been buying $2 cheaper at the beginning of the month.
Yeah.
Yeah.
So
could go either way.
Effectively,
right?
You're paying way more in terms of the actual cost of it itself, rather than just paying a couple cents more in interest charges at the beginning of the month. So,
yeah, I technically it could go either way, right? I could have bought HDIV today, and by the end of the month it could be $2 cheaper, or it could be $2 more expensive. So
we don't know.
It's kind of hard to time the price. Yeah.
Well,
we'll see.
Do what you think is best for your sanity.
Well, that's very true. But even if you go on Yahoo Finance, whatever, you can always look month to month and see where the little dips are. And if you go over 6 months with the purchases, and 6 months is a pretty good historical figure of things, you can see where the price is going to dip, right? If it's going to dip after the ex-dividend date, does the dip exceed what the dividend is going to be? Usually, yes, right? The dividend's 12 cents, 20 cents, whatever. Usually the dip's, 50% bigger That's usually when I'm buying. I'll give up the dividend of 20 cents, 30 cents to get it that much cheaper and, go on with the next month.
Yeah. It is possible that it rallies that day though, right?
Oh yeah, of
Yeah,
course.
yeah.
Right? There's always the possible. I haven't tracked, I've never looked at that before, Shawn,
Yeah.
to see what the actual price is on the ex-dividend date, like how much it drops. I don't usually buy that way.
I'll go and look, but
Yeah.
I mean,
sometimes
effectively, it usually drops by the amount it's getting paid out, right?
exactly. Yeah.
Like maybe a bit more, just because people are like worried, but like it always comes back like 2 days after.
Maybe when we're in Costa Rica, we should just sit on the beach and buy more shares with our margin account.
Yes. Yes. Speaking of that, JJ, should we do one of these videos from Paul and I being in Costa Rica?
Yeah, let's
What's
do it.
the
When are you guys going?
Third.
In 2 weeks?
give or take? Go another
wait.
week and 8 days from now, 9 days from now.
Okay. How long are you guys staying there for?
Well, Paul and I are going to go down on the Friday, spend a couple of days with our wives, and the wives are going to come down on the 15th, and we're going to be there for pretty much the rest of the week, right, Paul?
Yeah.
So until the 20th?
Yeah.
I think we're going to be there for 8 or 9 days, right?
Yeah.
Oh yeah, let's do it. It's in
Yeah.
the 2 weeks anyways, right? So
Yeah, it will be by the second weekend, I think.
We
Yeah,
can
whatever. It doesn't
in
matter.
2 weeks, two weeks after, you'll find me in Germany, probably
in
somewhere in
Germany.
Europe.
Nice.
Somewhere in Europe. Yeah,
Beautiful.
we're landing. Partner are landing in Germany, in Frankfurt, but then we're gonna go. I don't know what the itinerary is, so we're just gonna explore for 2 weeks.
Good for you, man.
Nice.
Yeah,
No itinerary is the way to go.
yeah. Keep it. I mean, go as it.
Yeah. Anna and I,
That's just like, I was going to say, it's just like our investing strategy. We just wing it.
That's the best way to learn, right? You
Yeah.
do it. That's the best way. You adjust as you go. You know. There's only so much you can prepare and read about, like at the beginning. Like also you're wasting that much time. Then just start and do it. You know, adjust as you go on the fly. So that's the best learning lesson. Well,
JJ,
within constraints, but yeah.
I could tell you so many travel stories of Anna and I just winging things because we travel a lot different than most people. Because she works for an airline, we just fly somewhere. We rent a hotel. I'll give you a quick one. We went to Rome. We said, okay, we're going to be up at 7 a.m. We're going to the Vatican, blah, blah, blah. We slept until like 11.
7.
Yeah. Oh, yeah. We slept
7? Okay, on vacation?
Yeah. Oh,
really?
yeah, definitely. But we slept until like 10 or 11 a.m. And so we get up, we go to a little cafe, have some, have a cappuccino, a croissant, and we make our way to the Vatican. And there's like 50,000 people there. And
Jesus.
yeah, and I'm like, whoa, what's going on here? And my wife's Brazilian. And there's a Brazilian couple in front of us. So we asked them what's going on. They're like, oh, the Pope is going to do a speech, going to do one of his, he's going to address the world. And I'm like, wow.
Sick.
Like if we had have been up at 7 a.m. to the Vatican by 8 a.m., we would have been out of there by 10. We would have missed all this. So, life, treats you properly and you see certain things. And we were happy that we slept in and we stood there and we watched the Pope do a speech. It was it was amazing. It was moving.
What an experience, right?
Absolutely.
Yeah.
Absolutely. And Anna and I have had many experiences like that traveling just because we wing it. We have like a very loose plan of travel. It's like, yeah, we're going to go to whatever country, country XYZ. And that's it. That's our whole plan. We're going here and let's see what happens. And I love it.
Actually, here's one question related to travel because I haven't gone much. So this is actually a perfect question. So when you do travel, what do you do? Do you usually buy a travel SIM card? Do you pay do you prepay in terms of roaming for a number of days, or do you pay as you go? Effectively, what have you found as like the most cost effective?
What carrier are you with?
Tell us.
Okay, I'll give you my little secret. I'm with Freedom Mobile.
Okay.
For $50 a month, actually $39.95 a month, you can get, it's basically worldwide roaming. You get
okay.
You get 10 gigs of data a month when you're in another country. And that's quite a bit of data for the amount of, Google Maps or whatever you're going to use. That's what I do. It's good in like 250 different countries. It's crazy. Yeah, you don't
Okay.
need to do anything. Like, you don't need to go on any kind of special roaming. You just walk into the country and boom, you get data. Paul and I used it when we were in Japan last year. When we were in Rome, 2 weeks ago. It's just don't have to do anything. Just walk off the plane and bada boom, bada bing. You have data. 10 gigs a month of out of sight of Canada data. It's fantastic. And it's super cheap. It's like $40 a month.
That is cheap.
Yeah, and I'm not a spokesperson for Freedom Mobile, but it's fantastic. It's really good program.
It's good as long as you travel, right? If you weren't traveling very much, it wouldn't be worth it. But
Well,
you travel quite a bit.
but yeah, that's totally true. But even the $40 a month is still cheaper than what most of the large carriers charge you per month just to have a.
Yeah, because
American-
I looked at TELUS like today, and it's like $18 a day.
Yeah.
Hey Shawn, is that your total cell phone bill, or it's $49 plus your regular bill?
No, that's my total bill.
Really?
Yep. Freedom Mobile. I'm telling you, man, I'm not a spokesperson for Freedom. I don't work for them. It is an amazing deal. I don't know why everybody isn't on it.
Shawn, you got to start a travel finance YouTube channel with Freedom as a sponsor.
And a barbecue.
Too bad Freedom is not offered in Quebec, so yeah.
Oh,
Yeah.
really?
All right, guys, we're almost at the hour and 15-minute mark.
That's okay.
Uh,
Effectively, most of our chat was at the beginning, right? So at the end, like whatever.
Yeah. Oh, true enough. But I was thinking maybe because I don't know about you guys, but I'm starting to get messages. People are panicking, especially with MSTE. But, also I'm starting to read posts on how HHIS is the worst investment ever.
Here we go again, right?
No.
Biggie's crap, blah, 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 right? So what would you say to people who are actually watching us about, because some people have never
effectively,
been,
us posting this the Saturday morning is a good time, right?
yeah, like
to
some
prepare for the next
people
week.
have never been
actually
in a
perfect timing.
volatile market, right? Some people, I guess, have never seen, maybe they just started investing and they've never seen their portfolio drop the way they have recently. So what, Shawn, like, for example, start with you. What would you tell people under these circumstances now? What should they do, or what advice would you give them?
Well, I have that actual exact situation from one of the guys I work with who has maybe 8 months into investing right now. And he's come to me quite a few times. Oh, Shawn, I'm down 20%. I'm down 23%. And I'm telling him, like, if you go look and look at history of the stock market, it's a cycle, up, down, up, down. We're just in a down cycle right now. This is where people make money. Buy right now. Buy on the way down. You can't time a bottom. You can't time a top. This is the time to buy. This is where people become rich, or this is where people live more comfortably now. You can purchase cheaper, lower your cost average. Things will go back up. Don't worry. That's what I tell everybody. Even at work today, this gentleman that I work with, I told him I bought another 100 shares of MSTE today. Why? Because I believe in Bitcoin. JJ, stop laughing at me. But no, I did buy other stuff. I bought HHIS because it's under my cost average. This is, it's the risk reward, but it's also a little bit of knowledge. This is when people make money. Things are down. The stock market is a cycle, and we're just in a down cycle right now. Buy what you can, and you'll be happy in 6-8 months when things start to go back up. You're going to see, wow, I made a ton of money by buying when things were low. That's what I tell people. Paul, what do you tell them?
Yeah, it's funny when you think about it. When Bitcoin was at $126,000, people were probably saying, "Oh, I wish I had bought it when it was at 60,000." Now it's at 60,000, and they don't want to buy it.
No, they're freaking out.
Now it's at 60. Yeah, and they're freaking out, right? So now's the time to think, well, if it's going to go back to 120, wouldn't you want to buy it now instead of waiting until it's at 100?
Yeah.
That's what people will do. They're going to wait until it gets back up to 100.
And then buy high and sell low, right?
And their friends are telling them, "Oh, I just made 50 grand in Bitcoin." They can be like, "Oh, okay, now I'm going to buy."
Yeah.
Right? And they'll buy it. It'll go up to 150. And then when it goes back down to 90, they're going to panic and sell.
Yeah.
So, that's exactly what you're saying, Shawn. Now's the time to look at whatever investments you have and determine which ones you really believe in.
Yeah.
Yeah.
Right? If you really believe Like, for example, Palantir has nothing to do with Bitcoin, but I think it's a good company. And for the longest time, it was like 25. Well, PLTE was $25 to $28. Now it's at like 16. I want to buy it now.
Yeah.
I don't want to wait till it's back to $28 and then kick myself for not buying it. So, take a look at what you like. And if nothing's changed with the actual company or the ETF or, whatever, now's the time to buy it. Buy it while it's cheap. Why, I don't know. It's like gold. Everybody wanted to buy gold when it was at $5,600 US. Why am I buying gold when it's at the highest point it's ever been at?
Exactly.
So
Yeah.
Don't panic. Basically, don't panic. Now's the time to take advantage of the cheap prices, I guess. Everything's on sale. Not everything's on sale, but a lot of things are. And so for me, now's the time to buy.
I'm panicking, Paul. I'm panic buying.
I'll just add two sentences. But effectively what Paul said. And if you can't stomach the volatility, just log off. Get off of Pop Blossom. There's a lot of crap on there. So just stop reading it. You're effectively wasting your time. You're effectively wasting your psyche. You're effectively wasting your energy, and you're not learning anything by reading all those posts. Just log off. Stop looking at the charts and just go enjoy your life outside of the stock market. Nothing cares. Nothing is really important.
Yeah. You can even
Effectively, you're doing more damage the more you look at the charts.
And you can
One other
automate
thing,
it, right, JJ? You can automate it, right?
Exactly.
You can set up what they call it, a PAC, pre-authorized contribution or something.
Yeah, exactly.
You can automate it so that you're contributing to your TFSA, buying, and you don't even have to. You could close your Wealthsimple for a year.
Yeah.
Yeah. Effectively speaking, yeah.
Come back when the market's better.
Self-plug effectively is that if you can't effectively manage your investments, that's where we professionals come in, right? And do it for you.
Mm-hmm.
So hey, that's always a possibility. You can reach out.
Yep, absolutely.
Have you started? Do you have any clients yet, JJ? Have you started?
I'm under probational license, so I'm looking at securing 2 or 3.
Cool.
Plus, I'm coming to Ontario as well.
You moving?
Adding Ontario as a license because when it comes to financial advisory, it's provincially regulated.
Mm-hmm.
Yeah.
So the more provinces you want to serve, the more tests you have to do. So, yeah. And I might be looking at going to Ottawa at some point. I don't know.
Moving to Ottawa?
Doing business in Ottawa. So we'll see.
Nice.
Okay.
Nice.
Yeah.
All right.
Long-term prospects.
Just
so
so,
nothing's set in stone yet.
Just in case people are watching this on Better Call Paul, JJ, give your channel a plug so we can get you some more viewers.
Oh yeah,
sure.
guys, subscribe to JJ's channel. He's almost at 1,000 viewers.
Yeah.
And
subscribers.
Great information.
Yeah, almost at 1,000 subscribers, and you got to get
We're
there.
almost there. 90% there.
Yeah.
Almost. Yeah.
JJ,
And people who don't.
Let's go.
Oh yeah. People who don't know me. It's convos with JJ, like literally convos with JJ. So it's pretty easy to type in. And I mean, I usually pin my comment basically if you can, and then you'll find me there. Oh yeah.
Yeah, everybody,
coming. So
go to JJ's channel,
exactly.
like, subscribe, leave a comment on his videos.
And comment.
They're full of amazing information. JJ's brilliant.
Oh, thank you.
Well, you are. And he's, he's had some amazing guests. And
Growth comes with humility, right? So I don't want to overblow myself. It's better to be,
No.
Humility comes with the growth.
JJ deserves praise, guys. Everybody go and
thank you.
subscribe to JJ's channel and watch his videos. They're fantastic. Tons of great information. Paul, anything to say?
Does it go wrap up, right?
No. Next video will be coming from
Colombia,
Costa
right?
Rica.
Costa Rica.
Yeah, we're going to try and connect with JJ from Costa Rica and do our next video from there. Yeah.
See y'all in 2 weeks then.
All right, amazing guys. It was a good video.
Yeah.
I think this is a great reminder for those who are newer to any sort of corrections. So yeah, take what you need for your own investing journey, and just remember that the learning never stops.
That was true.
And neither does your money.
Yeah. Money never sleeps.
Nope.
Exactly. That's the beauty of investing.
Yeah, just stay invested.
Exactly. All right. Take care, guys. Have a great evening.
Have a great
and then
day,
we'll see y'all next week. See y'all in 2 weeks.
Yeah, absolutely.
All right. Bye, guys.